Why do 90% of traders fail? So let's talk about it. Now in this video, I'm going to be focusing more on the psychology aspect. I know a lot of you guys like to focus on the technical side of trading, but if you've been following my channel for a while, you do know that I much rather focus on the psychology aspect because I do believe that accounts for at least 90% of your trading success. So let's get into the psychology of why most traders lose. Now, many of you may know this already. It might be, pretty much the same information spewed out to you. You've heard it before. But again, the purpose of this video is not to tell you why you lose. The purpose is to remind you of what needs to happen in order for you to become a consistent winning trader. And what needs to happen is a change, not in your strategy, not in your technicals, but mostly in your mindset. So let's first talk about the typical journey of most traders, right? So they start off trading, they learn about the markets, maybe they've been doing it for a few months, maybe a year, they're pretty new to it. And here's how it goes for most, if not all traders. They lose a bit of money in the markets, they pay their market tuition, and they stick with it because they really think and feel that they can learn and make this a living potentially in the future. So what happens here right off the bat is once you've lost a certain amount of money in the markets, your brain is automatically wired to be thinking about making that money back. So let's just say, for example, you've been trading a few small accounts, you're trying to get the hang of trading, you're trying to get your discipline down. And let's say you've lost a few small accounts, like, 1,000 here, 2,000 there. And you've lost, let's say, 10 grand in the market. So you've lost 10,000 bucks. And, to you, that's a pretty significant amount of money. To whoever's lost that amount of money, it's significant to them. So what your brain is already thinking about now is not about how am I going to be a successful trader. It's automatically thinking, okay, how am I going to make that money back? And this is what causes basically an endless loop of consistent errors repeating themselves over and over and over again in your trading. So for example here, let's say this trader's been trading for a year. He's lost some money in the market. As we said, he's lost about 10 grand. He's working a job so he can continuously fund his account. But right now, his mind is not focused on trading well, even though that's what he intends on doing. He may have the intention of becoming a full-time trader, of doing whatever it takes, having the discipline, but that is all talk, because this trader, what he's really thinking is, okay, I got to make that money back and take it back from the market because it took it away from me, and I can't have that. So a lot of traders are in this cycle, and I want you, if you're one of those traders listening to this, I want you to really look deep down into your psyche and really try to understand what is it that you are thinking about each and every single day in the market. Are you genuinely coming to the market with a mindset of performing well and following your plan? Or is that just all talk and you're actually just thinking about making as much money back as you can as possible? So, the traders that I've talked to over the years, many of them come with the same issues. They tell me they're trying to, grow their accounts. They're trying to get this trading down, and they can make money, but they end up giving it all back in a day or two. So it's kind of like going up the ladder and then falling right back down. And this is what's called, I like to call it the recovery ladder concept. So what this means is essentially your mind is focused on recovering and recouping prior losses in the market rather than, climbing the ladder slowly and steadily and safely. So if you want to become a full-time trader, many of you know this already, but what it requires is, slow and steady, consistent progress. That's what it requires. You're not going to go from 0 to 100 in one day or in 1 week or in 1 month. If you want to be making significant amounts of money and doing this for a living, it's going to take years, and it's going to take hard work, and it's going to take time. But what most traders think is that they can do it overnight and they can recoup their losses the next day or the next week. And they're not even thinking about, how am I going to be doing this for a living? What is required of me to be doing this as a career? And the answer to that is, it's definitely not thinking about making money, because if your mind is on the money, I can assure you you're likely going to lose over and over and over again. And many of you have probably gone through that process for several months or several years by now and realized it definitely doesn't work. So what does work is focusing on the process. Now, in order to be focused on the process, first thing you have to do is completely get over your mindset of making the money back. It's almost like you have to pretend you're starting fresh. Say you're just getting into trading, but you've been doing it for a year. You have to trick your mind into thinking there's no money to be made. There's no money to be made back. There's nothing you need to recoup. All you need to be doing is focusing on your process, and the money will just flow in to your account. And essentially, when you think about trading, it's really not difficult. The idea of trading, the idea of making consistent money in the market, when you look at it, from the outside, it's very, very simple, right? It seems so simple. Yet when you try to apply it into the market, somehow you end up blowing yourself up. You make mistakes. You take stupid trades. You maybe don't stop out of trades. And you just have this deep desire to always be winning and making money, when in reality you have no control over that. Now, the trading industry has also fooled you, because every time you go on Twitter or say YouTube, what you see is these gurus selling you a lie. They're all selling you this lie that you can turn your $500 account into $250K in 3 hours or whatever it may be. And this is a big contributor to why most traders fail, is expectations, right? So when you're coming into the market, seeing all these advertisements and these marketing ads telling you that it's possible to make so much money so quickly, of course your expectations are going to be sky high, because everyone else seems to be doing it magically, right? Well, I can tell you 99% of Twitter is fake. 99% of these gurus are fake. And you really have to ignore all the noise and focus on yourself in this game to find real consistency and real success. So many of you guys have known my story. I put it out on YouTube and I shared my personal journey with you guys. And the reason I wanted to do it is to be honest, transparent, and tell you what it really took to become consistently profitable. And still to this day, everything I said in this video holds true. If I could go back, do it all over again, all the stuff I learned in that video, it would have sped up my learning curve by, at least a year. So I do these videos in hopes of helping other traders who are maybe brand new to get the right habits down, so that they don't have to go through all that unlearning and, getting rid of all those bad habits, right? So it's much easier to learn the right habits right away, rather than unlearning bad habits after a year, say, or a year or two of trading. So the goal of these psychology talks is not to make anybody all of a sudden a consistently profitable trader, because that's not realistic. I know my advice and my tips, they may help some traders, but the goal is not to make anybody, flip their trading around, because I know that's not possible. What I make these videos for, and why I talk about psychology, first off, is because I have a very big passion for it. I really enjoy talking about the psychology aspect of trading. The technical side of trading is all right. Of course it's important, but to me it's very boring, and it's honestly pretty straightforward. You don't need a lot of practice or anything to learn the technical side. You do need practice to learn is the psychology side. Because I don't care if you're a professional trader who's been doing this for 10 years or an amateur trader who's been doing this for 1 or 2 years and losing money. Regardless of that, regardless of your status, what kind of trader you are, psychology is always going to be a struggle for every single trader out there. And it's our job to manage our own psychology in order to do this for a living and get the best results possible and get the results that we desire. So there's an invisible line between what you want to achieve in trading and what you're actually getting back from the market. And that invisible line is created by your mental aspect and your view of the markets. So many traders come into the market thinking the goal is to be right. It's to, conquer the market, to win, and to never lose. And that is a great mindset if you want to set yourself up for a huge loss or a blow up day. Because one day the market will come at you and it will flip you upside down, and all your belief systems will appear in your trading account that day to tell you, hey, this doesn't work for you. It may work 99 trades out of 100. All it takes is that one, and it wipes you out, right? So let's talk about what happens when you're trading from this kind of mindset. So like we talked about earlier, you're coming from a mindset where you're trying to make money back. Prior losses are really upsetting you, and they've kind of burrowed themselves in your mind, and you can't seem to get over that recovery ladder concept that we mentioned earlier. So here's what's going to happen in your trading when you're thinking from this mindset. And if this sounds like you, then you're most definitely in this mindset. So you're going to be having nice green streaks. You'll make some money. You'll decide to scale up relatively quickly as a result of seeing good results. And you'll take a big loss. Or you'll revenge trade one day and you'll take several losses. And because you sized up so quickly, your account depletes pretty much all of your previous earnings, and now you're back to square one, or maybe even less than you started. So this only happens because you're thinking in terms of making money rather than trading your process. Now, if you're trading your process, here's what's going to happen. You're not going to oversize. You're not going to care if you're green or red on the day. You're going to take whatever the market gives you every single day. You're not going to have expectations in the market, and you will be trading from a logical perspective rather than emotional. And this is the mindset you want to be in. So you want to get rid of that old mindset that's making you lose money, because you know it's not going to change unless you do something about it. And you want to adopt this new mindset of process rather than profits. Now, I know this all sounds pretty straightforward, and it pretty much is, but it's a lot harder to do in reality. And these talks can help, but it's really up to you to make those changes. If you're really serious about trading for a living and you're tired of losing money over and over again, or either losing money or not making any money or going in circles, then these changes need to be taken seriously. Otherwise, you have no reason to change, and you'll do the same things over and over again for eternity until you lose all your money, or you just keep going in circles. So this is why I recommend most traders give it at least 2 to 3 years before considering quitting. I think 2 to 3 years is a kind of a good area to gauge where you're at. I don't know too many traders who see success in their first year, but I do know a few, and that's the exception, not the rule. But majority of traders take probably 3 years on average, at least. So if you're in your first year, say, or your second year, and you're still losing, don't beat yourself up over it. You're pretty much on par with pretty much every trader out there. But if you're in your third, fourth, let's say fifth year, and you're still repeating the same mistakes, and you know what you're doing wrong, but you're not making any changes, that's when it's time to have a serious chat with yourself and consider changing careers or making a change right now. So there's a common theme I see with a lot of traders, and what they'll do is they'll kind of join different chat rooms and try to learn different strategies and try different indicators, because they're kind of looking outside of themselves to find the solution to their trading problems, when in reality, they need to look inside themselves and the problem's right there. But most traders are not self-aware enough to understand this, or they don't want to admit it. They don't want to admit that it's their fault for losing money. It has to be the market, or it has to be something outside of them, right? Some people just do not like to take the blame, and if you really want to change and really want to become consistent in this game, the first thing you need to do is admit it's your fault. You are the reason you lose money in the market. There's no other reason. I don't care if you blame it on market manipulation, you blame it on someone's alert, that's all on you. It's all on you. So it's your decision to put on risk in the market. And when you lose, you better be okay with losing that risk. Otherwise, you're going to have a hard time taking your losses. So when you're oversizing in positions, some of the biggest losses I see are when traders oversize, right? Because first off, you're oversizing for one reason. You're doing it because you know you're going to be right on the trade. That's what you're thinking. You're taking double your risk or triple your risk because you know that this trade is going to be the one, right? Well, when it comes to reality, the market doesn't work that way. Just because you want a trade to work, that does not mean it's going to work. In fact, more often than not, when you take those trades where they're, whether it's double or triple your normal size, your normal risk, often those are the losers, right? You take the loss and, those are the most emotional trades you're going to take because you're not accepting the risk. So before getting into any trade, this is one rule I have that's, it's a hard and fast rule and I try to never break it. If I'm getting into a trade, first thing I do is accept the risk. I don't look at how much profit I'm going to make. I don't look at my profit target. I look at where is my risk? Am I comfortable with taking that amount of risk? If the answer is yes, then I get into the trade. If you don't accept the risk prior and you're jumping into trades impulsively, then what do you expect to happen? Of course, you're going to take losses and of course you're going to hold on to losers because you had no plan to stop out. Your mind was thinking about winning and making money. You were not thinking about how much money I could lose. You were thinking, how much money is this going to pay me out when I am right? So if you're really serious about making a change and actually doing this for a living, I'm going to give you a set of steps to take right now. And you can either follow them or ignore them. That's totally up to you. But this is exactly what I did to change my trading and become consistently profitable. So the number one thing I did was I sized small until I saw consistency. Now, for me, it was 1% of my account per trade. I was risking 1% of my account at the time. Now, even if you have a small account, that may not seem like a lot of profits, and you're probably right. You're not going to make much money doing that. But the goal is not to make money if you're struggling with this. The goal is to develop the right habits and start to develop the right process of trading. Because I assure you, the money will come in the end. You don't have to worry about that. All you have to worry about right now is getting the process down. And the best way to do that is to start off by trading small for at least 1 to 2 months. See that consistency, then you can slowly start to add risk. So if you're still losing each month, or let's say you're break even each month, you definitely have zero reason to be scaling up, right? Until you see that consistency, until your account proves to you that you are developing the right habits. And the way that you'll see that obviously is you're making money, right? Because your trading account is a direct result of your beliefs on the market. So what you believe in the market is going to reflect directly into your trading account. So if you're the type of trader that blows accounts all the time, that directly tells you that your beliefs about the market are incorrect. So they're clearly not working for you, right? So what are you going to do about it? You're going to make a change, or are you going to just keep believing the same thing over and over again? So the right beliefs, like we talked about, are going in the market with no expectations, keeping that bet size appropriate, being comfortable with the risk, not trying to make money or trying to make back prior losses. All that stuff is gonna mess up your trading, 100% guaranteed. Your main focus should be on following your plan, and you do that day in and day out, the results will come, I guarantee it. Now, the second thing you need to do is have preventative measures put in place. So in case you do have a bad day, which, most traders will have bad days, it's pretty common, it's pretty hard to avoid losing, right? So when you do have those bad days, there's a limit. So you don't lose, 20, 30, 40% of your account in one day. That is not acceptable. That's not That's not sustainable, right? So have a limit in there to lose, say, 5% of your account per day if you're risking 1% per trade. So that's, say you take 5 losses in a row, you're done for the day, no more trading. If you don't have the discipline to have these limits put in, then you probably shouldn't be trading. Simple as that. So if you have a broker that has, say, a max daily loss, I would highly suggest using it. If not, you can, stick to a mental stop loss, which is what I do pretty much. And again, like I said, if you do not have the discipline to at least follow this mental hard stop on the day, you should not be trading. You should definitely find another career because it's definitely not for you. Now, most traders, if they simply implemented this into their trading, they'd probably be profitable right now. If you go and look at their broker statements, probably, they make money, and then one bad day, give it all back. So if you take that bad day and minimize it, put a limit on it, rather than having it take, 10, 20% of your account or whatever, what does your P&L look like? What does your statement look like? I would bet it's probably green. And this kind of brings us to our third point, which is journaling. So for me, journaling is, I simply look at my broker statement and I look over my trading days. That's really all the information I need to tell if I'm doing something right or doing something wrong. Now, if I see my broker statement and I see one day that I give back, say like 3, 4, 5 days of profit, I know that's on my end. I know that I did something wrong that day. I either didn't respect my stop or I overtraded and revenge traded, and that's on me. So I look at those days as lessons and I try not to repeat them, because if you ignore those days, they're just going to repeat themselves over and over again because there's no lessons to be learned. There's no punishment for these bad habits. You're just kind of scoffing at it and letting it go, and it's going to come back to bite you again. Guarantee it. So journal your trades, look over your trading, see where you're going wrong, and see where your triggers are, because everybody has their triggers in trading, right? Whether it's, being up on a trade and then watching your unrealized P&L go red and you take a loss, that's a big trigger for a lot of traders. I know that. Or whether it's taking several losses in a row, say you take 2, 3 losses in a row, that can trigger a lot of traders as well, and they want to make back those losses. Or say you have a stop loss in place and you ignore it. So you have a mental stop on a trade, you let it go past your stop, you give it a little bit more room, and then you find yourself adding to a loser and then taking a huge loss, right? So these are all kind of triggers, and you need to find out what your triggers are in order to fix them, because if you don't know what's triggering you, how do you go about fixing it, right? So once I went over all these 3 things in my trading and really took them seriously, that's when my results started to come. Now I will say don't expect perfect results. You're still going to be making errors, but the idea is to minimize the errors and limit them so that you can make more money than you're losing. So even when I became profitable, I was still making plenty of mistakes, but I was able to make much more money than I was losing while still making those mistakes. So it allowed me to become consistently profitable. And I still work to this day on fixing a lot of my errors. And believe me, you're never going to become a perfect trader. Whether you're doing this for 5 years, 10 years, you're still going to have things that you need to work in your trading and improve on. And that's the beauty of trading, because there's always room for improvement. It's basically you versus yourself. And you will learn a lot about yourself in trading. That is another nice part about it. So I'll share a little story with you guys just to end it off. And this is a personal story from my journey after I became profitable. So I went through a little bit of a struggling period after my first really nice year of trading. So I had gone to my accountant to file for my taxes for the year. And we went over the numbers, and they were pretty solid, pretty big numbers. And I saw my taxes owing, and it completely shocked me. I had never paid that much taxes in my life, because this was my first really good year of trading. And this actually affected me negatively when I brought it back to the desk, to the trading desk. Because what I was thinking in my mind was, geez, I don't want to be paying this much in taxes. Maybe I should make less money. And, this seems odd to say now, but it really was something I was thinking about, and it really did affect my trading for a certain amount of time. I was thinking about the taxes. I didn't want to make that much money. And what would happen is I would sabotage myself knowing what I was doing, knowing what I was doing was wrong in my trades, but doing it purposely in order to avoid paying such exorbitant taxes again for the next year. And I started to realize this, and you have to be very self-aware in trading, because these things are very subtle and it takes a lot of self-awareness and introspection to recognize them. And what I noticed was, I was really hurting my trading over this belief system, this belief that I don't want to pay high taxes, or paying high taxes is bad. So what I did was I actually reprogrammed this belief after talking to, I went to a kind of like a trading coach, a counselor, and I got some guidance in terms of how this belief was affecting my trading. And we talked about it, and I started to make a new belief. And my new belief was that paying high taxes was a good thing. And the reason I said that was because most people are not lucky enough to make the amount of money you can make in trading. And if they're paying the bare minimum in taxes, that's not really a good thing if you think about it. You're making low income minimum wage, or, middle average income. Sure, you're not paying much taxes, but at the end of the day, if you're making a really high income and paying high taxes, you're still doing much better than 99% of the population, right? So this is the kind of new belief I started to form. And as soon as I started to develop this belief, my trading went right back to, consistent, profitable, and my process was right back on track. Now, the reason I'm sharing this with you guys is because I know many of you guys out there have different belief systems, and I want you to introspect into your own life. And, if you're struggling with your trading, I want you to look at your belief system and really see if there's something in there that's kind of, holding you back. Because for many traders, it's not necessarily that they can't make money. It's more so that they maybe don't want to make money. Maybe they don't believe they're worth money, worth X amount of money. A lot of traders have negative self-talk about themselves and don't believe they're actually worth the amount of money that they make. So then they sabotage themselves. And this is something you don't really hear talked about much in trading, but it's, I've seen a few traders go through the same thing. Maybe they came from a family that wasn't really very wealthy. They didn't have much money growing up, and they don't really believe money is a good thing, and they maybe see money as evil. I mean, a lot of people who are religious, they can see money as evil, or, people who are just, not materialistic. They just don't like money. And you have to change your relationship with money as well in order to, be level-headed and trade your process correctly. And your relationship with money should be very neutral. So you love money, you don't hate it. It's just there. It's a means to living the lifestyle you prefer. It allows you to purchase things that you enjoy, do things you like, and that's all it's there for. Is it going to make you happy? Probably not, maybe temporarily, but at the end of the day, most people are actually more miserable the more money they have. And that's because they have such a high attachment to the money. That's their fulfillment. But you have to have a very neutral relationship with wealth and money and pretty much all materialistic things in order to be a great trader, because money is going to come and go. It's going to flow in and out of your account day in, day out. So you better be okay with that. If it bugs you, to lose some money, or if it makes you excited to make some money, you're probably going to have a hard time trading, because those emotions are going to take you on a roller coaster, and you're just not going to be a rational thinking trader. You're just going to be making emotional decisions and impulsive decisions because you're letting the money influence you and influence your decision making. So I hope this kind of helps shine the light on how important psychology really is in trading. I know a lot of other traders may not look at it as seriously as I do, and to be honest, that's totally fine. But for me, the technical side of trading has never been that important. I've never had much of an issue, and most traders I talk to don't really have much of an issue with their technical analysis and all that stuff, because it's relatively simple to learn. But the hard part, as we've talked about, is mastering your psychology. And that's why I put so much emphasis on these psychology talks. I try to give psychology tips, and I really think if traders master their psychology and take it seriously, not just talk the talk, but put it into practice. Like right now, we're just talking about it, but nothing's going to change in your trading unless you actually put it into work. You develop these habits, these good belief systems, these habits, and intentionally and sincerely put it to work. Because, talking about it is one thing. And the reason I talk about it to you guys is just as a reminder. It's a daily reminder to tell you, hey, this is you're in the wrong mindset. Your trading account's telling you you're not in the right mindset. You got to make a change or you're going to keep seeing the same results over and over again. And this is a reminder for me as well. I constantly remind myself every single day, every single week. Otherwise, I wouldn't be consistently profitable today. I'd probably still be making the same mistakes. But you have to keep up with that psychology, because, you're going to have days where you're, kind of get lazy and just slip up and you think you got it all figured out. And then, then the market comes and slaps you, right? So you're never going to have it figured out. You're never going to have it all figured out. I can tell you guys that. And the moment you do, you don't. So what you got to do is stay neutral and always be self-aware of what kind of mindset you're bringing into the market every single day. And you'll get really good at this. And eventually you'll actually be so good that you can actually tell which days you're going to lose money before you even get to the screen. And I've kind of noticed that as well in my trading. When I get to the screens and I'm lacking sleep, or I just feel groggy, I don't feel in the mood to trade, I know for a fact I'm going to take boredom trades. I'm going to gamble. I'll take losses. I won't respect my stops, because I'm not in the right mindset. It's all about your mindset. So, the days I'm in the right mindset, almost always I'm making good money. I'm making some money or making good money. The days I'm in the wrong mindset, almost always I'm losing money, and it's no coincidence. So I'm going to end it here, guys. I hope you really enjoyed this talk. And like I said, don't talk the talk about the trading psychology. Do it. Put it into practice. Talking about psychology and watching these videos is good, but to really make a change, you actually need to walk the walk, not just talk the talk. So if you are truly sincere about this, you will do what it takes to make those changes. All right, good luck.